So now we're going to talk a bit about your income sources. Okay, you are a Canadian resident for tax purposes, so you need to know what your tax burden is going to be. So you need to know what your source of income is, because that's what's going to determine your tax burden. So in Canada, how you're taxed partially depends on what type of income you're earning. So the first one that you're going to see is the employment income. Employment income is very self-explanatory, if you want to put it that way. So you work for somebody, they pay you a salary. Out of that salary, you have deductions such as taxes, CPP and EI and others that are taken. And every year you report that on your tax return. And the tax return is pretty much a reconciliation of how much taxes you paid on your T4 versus how much you actually had to pay. Because obviously your employer doesn't know your whole life situation. You probably have other deductions or other sources of income. So at the end of the year, you give the CRA your employment income. The employer also gives the CRA what they reported in terms of your employment income, and the CRA makes sure they match that. So you have to make sure that you report all your T4 income. And if you have any other sources of income, report them as well. So the first one is employment income. So that's usually through a T4. If it's employment overseas, you won't get a T4, but you would get some sort of similar slip, and you would need to report that in Canadian dollars and claim any credits that you would have for foreign taxes. So that's the first. The employment income goes on a T4, and you have limited deductions. Okay. And you report it. It's fairly easy. You report it on your taxes. The tax software tells you this is how much taxes you owe, or this is your refund. Self-employment, similar to employment, but you're self-employed. That means you don't have a boss. You probably have clients as bosses or whatever the case may be, and you determine your own level of income. So your income level is determined by how much effort that you put in to there. So self-employment income doesn't come in slips. Sometimes you're going to get a T4A for contractor services, which goes into self-employment income. But other than that, if you're self-employed, you're just invoicing your clients, you have to keep accounting record in order to transfer that to the CRA and determine your tax burden. One thing with self-employment, with CPP, you have to contribute to your own CPP. You don't contribute to EI unless you want to. There's a voluntary, enrollment for EI, for parental and sickness leave. Not suggested. If you want to go into the calculations, we can do that. So T4, self-employment, you need to maintain your records, income and expenses. You might need to register for an HST. If you make more than 30K, you need an HST number. And under 30K, some businesses need to do that already. Some businesses are also exempt. So make sure that the business industry you're in, you are aware what the requirement is when it comes to HST and the reporting and the 30K threshold, right? Next, what we have is investment income. So investment income, the name itself implies that it's if you've had some money, you put it somewhere, you invest it somewhere, and you're getting a return of your investment. So you get a return of your investment, and that's investment interest income, dividend, and rental income. Capital gains. Rental income can also be self-employment if you meet certain criteria, and if you become self-employment, you get more deductions, okay? But rental income in general is an investment type of income because you've invested quite a bit of money and you're getting a rental income in return. Okay, so each one of these types of income is taxed differently. Interest is taxed dollar for dollar. Dividends are taxed with a gross up amount for any taxes that potentially the corporation paid before paying out the dividends. Rental income, you're able to deduct certain rental expenses before paying the taxes on that. And capital gains only have a 50% inclusion rate. So in general, you need to be able to know what source of income you've generated. And once you know the source of income you've generated, you are able to, from there, determine how to treat it, whether there are any strategies you can employ in order to maybe reduce the tax burden while maintaining the same lifestyle that you are enjoying. So it is important to understand the different sources of income that come in and how to treat them on your tax return. The intention of these sessions is to really go through each types of items that go on your tax return, and then at the end go through the full guide and tax return with you for you to really fully understand your requirements in Canada. Again, this course is really focused on your first year, either as a Canadian resident dwelling with taxes, or as a small business owner trying to navigate those issues of compliance, strategy, growth, etc. So I hope this was useful. See you on the next video where we'll talk about other deductions that are available to different types of income.